Good to go.
All right. Okay, let's go ahead and get started. So, hey guys, what is today's date? The year is ticking right along. We are May 23rd,
2021.
2021, back from the future. Um,
The price is 70K.
right.
No, I'm joking.
So let's talk about what do you want to talk about, Rock?
Well, Bitcoin's looking quite interesting. I mean, it had that throwback, and it was just like one massive candle
Yeah.
on Bitstamp, and Coinbase too. A little bit worse on Bitstamp. I think it led that dump. But it
Yeah,
seems like it's
let's see here.
consolidating, and when I look at it on the weekly, and it seems logical that we'd get a red correction candle on the weekly and perhaps even some consolidation. But in
Yeah.
my opinion, like if I just look at the market structure, and if I even look at the market structure on a 1 month chart, um, there's never been 4 months in a row in a Bitcoin bear trend of green, right? So to me, this is
Mm,
uh, uh, I would define this as a bull trend myself, and I'm expecting corrections and chop and consolidation, maybe some shakeouts and some black swans and all the kind of fun stuff. But I've kind of shifted my mindset, especially like with that retest of that other high. I've kind of just shifted my mindset into, all right, I'm just gonna trend ride and shifting from bear to bull.
yeah.
So perhaps even leaning more towards dips and bounce plays now. In fact, that last crash, I probably would have taken if it had stabbed down to lower levels. I might have taken a stab at it with some margin on BitMEX for fun. But it didn't even make it down that low, and it wicked up pretty quickly. So
Yeah, it was super fast and it was really I think most of the action was here on Bitstamp. And this is just an example of how one idiot whale can cost him or herself a lot of money by placing massive market orders.
yeah.
So, for anybody that doesn't really understand order flow or like what caused this, um, do you guys know what order size this was? I
I,
can't
I
remember.
don't I don't think it was a ton, because it started on Bitstamp. I think it was about 5,000 Bitcoin on
5,000
Bitstamp.
BTC,
Yeah, so the order book must have been a
5,000
bit thin, because
or
in other exchanges I'm
7,500.
not entirely convinced that 5,000 Bitcoin would create that kind of a massive sell-off. But arbitrage bots, it started on Bitstamp, and arbitrage bots and other exchanges start to pick up.
Yeah.
Obviously, there seems to be a little bit more symbiosis between bots on Bitstamp and Coinbase. Um, Bit I guess Bitfinex followed along as well, but I know Bitfinex often likes to try to compete as a market mover themselves,
Yeah.
so they didn't necessarily go down as low.
Yeah, and it's so strange. We talk about how Bitcoin is like the most liquid crypto, but I think it's a really good lesson to kind of talk about this and how important it is to understand that like one idiot, one stupid whale, because listen, not all people that have a lot of Bitcoin are wise and actually know how to trade. In fact, I would say like most of them probably don't even understand the basics of like order flow and market depth and stuff like that, right? So like you get one person that causes like, a 10 to 20% panic dip or just washout on one exchange, right? And so what happens is, and the reason why this happens, it's like, say you have 5,000 Bitcoin, which is a crap ton of money. And then you're like, I just want to get out of this. And then you hit market sell. What that's going to do is if you look at an order book, meaning the bids, right? Like all of the active limit orders, it's going to take all of those out. So if there's like, say there's, I'm going to just round off for simplicity's sake. Say there's like 1,7,500 and you hit market sell. Well, it's going to take those 1,000 and then it's going to search for the next closest one and it's going to eat all of that up until it's filled. And then once that selling is done, you're going to have people that restack the order book and try to like buy the dip. Um, so you see the order book on the exchanges. So I don't have Bitstamp up right now, but like you'll see it on any exchange that you go to. They all have level 2 and time and sales. So the order book shows the bid and the asks, which are the active limit orders sitting on that exchange. And then you have the time and sales, which is like a history, a record of all of the executed trades. Right. Yeah, you have it on Coinigy too. I really don't pull it up on TradingView. I usually, if I'm looking, and really the only time that I kind of focus on the order book is whenever I'm looking to get fills on something, or I'm like watching an important price area, because it's real noisy. Like right now, like if you look at it through like this choppy stuff, it really doesn't mean anything. If you try to figure it out, you're just going to go cross-eyed. So you'll have people that like step in and do this, but like it's just important to know, like you can be the most patient, disciplined, skilled trader in the world, but there's always that possibility that one idiot could like take your stop out or cause the market to break a key level, and then it scares people away and then your trade doesn't work out. That's why like I never take any trade personally anymore. Like I used to be a real hothead about this stuff, but you just got to really be stoic about it and understand like there's a lot that happens in the markets that are outside of our control. And if you let that affect you mentally, it's going to affect your future trades, right? So if you kind of like accept it and move on, so going back to the technicals, that's why I say like I don't really use stop orders on anything other than Bitcoin. Even like Ethereum, I don't like using stop orders on Ethereum just because we've seen these flash crashes. We've seen them so many times, and oftentimes I'm like, yep, if I had a stop order there, sure enough would have taken me out and popped right back. So does it increase the risk a little bit by not having stop orders? Sure. Knock on wood, I haven't had any like disasters since I've started trading Bitcoin. I have had cases where I'll get like an alert and I'm like, oh crap, price is unexpectedly like breaking through an area, and then I'm like scrambling to get out of a trade, and I've lost a little more than I anticipated or had kind of planned for. But like in general, I think I've actually done better over the years by not using stops on smaller cap coins, because stuff like this happens, especially in altcoins, right? The thinner the market, the smaller the market cap, the higher the risk is of that. So that's just my opinion. Rock, what's your take on that?
Yeah, like I personally stopped using stops since 2015. After that, I usually do mental stops. And where stops would be the most important to me is if I was doing any kind of margin or leverage trading.
Yeah.
But generally, when I was trading futures on BitMEX, I was mostly scalping and doing a lot more day trading with it. So just smaller intraday moves. So oftentimes that meant that I was in front of my computer and able to manage it live without setting a stop.
Yeah.
And I'd usually just have the chart running and my BitMEX account open while I multitasked and did other things with some alerts. So I always knew what was going on. And the only problem with that approach is, well, two problems with that. Number one, the BitMEX lag kind of like took away a lot of the potency in my strategy at the time, because I was doing like arbitrage scalping. Mm-hmm. So I was like actually watching other exchanges move ahead of time and just live arbitraging instead of running a bot. But the lag kind of, hit the brakes on that. And then two, just, time and health goals of like not wanting to sit on my computer for 10 hours a day, like babysitting a trade, right?
Yeah.
Or feeling like I need to find a trade or something like that,
Yeah. Yeah, that's a good point. So, let's do this. Why don't we zoom out? So we kind of covered the flash crash and what caused that. Let's talk a little bit about the bigger picture and kind of where we anticipate things to go. So like Rocky said, since we made this kind of even high and we broke 6K, he feels like we're back in bull territory, and I agree with that. So there's always the possibility that this could be like the mother of all traps, where like we spiked up to 8K and then we just collapsed back below 6K, right? That is a definite possibility. I would put the probabilities of that as fairly low. Just again, in my opinion, I think that because of the way that the market structure looks right now, I'm thinking in similar terms to Rocky, where I'm interested in bull market type setups again. So, nice dip buys, nice breakout plays, ascending wedges, stuff like that. Now my second, the second thing that I'm thinking is, I don't know if we're just going to continue like right now. Like, I think we could get some consolidation for the next several weeks or maybe longer. And to give you kind of a comparison, and again, history doesn't always repeat itself exactly, but the way that I kind of view this price action right now is kind of like we're right here in 2015, where, we came out of accumulation, we had that, even high, and we broke out of the first resistance area. So I kind of look at like this as like the 6K zone, right? And again, it's not going to look exactly the same, but it's kind of the similar idea, right? So like right now, we're either right here, and then you can see like it actually took a while for this to consolidate before getting another breakout. And I actually prefer that. If we are going to go back into a much bigger trend, if we're going to go back into a big bull cycle, like, I don't necessarily think it's the most healthy thing if we just kind of shoot parabolic like this. Like, to me, unless there's some kind of global economic fundamental driver of that, I would actually prefer, and I think it's more sustainable, if we get some consolidation inside of either zone 1 or zone 2 that I had marked up here, where we hold like a higher low and then we get a breakout from there. Just because, again, we had 100% move, right? Just in the past, 30 days or so. So, from 4K to 8K, I would like to actually see some consolidation. Rock, what do you think about that?
Yeah, I agree with you. A 6 month ascending triangle or symmetrical triangle in that zone, I think would be healthy. If it did just break out and push up onwards, if it did start to go really parabolic, as fun as exciting as that is, it kind of starts to bring us closer to square one again. Like, holy crap, are we really starting to get a little bit exaggerated here on the price movements, right? Therefore, expecting a bigger market crash and therefore some more recovery after that, right? Unless it turns into like a 2013 scenario, double bubble type of thing, where it just keeps slowly grinding up till it breaks the all-time high and then goes parabolic. And the only way I could see that happening is if we're on like right on the precipice of like mass adoption. Like, if suddenly, like, because how technology adoption, what's interesting with Bitcoin is it's putting a dollar value, it's putting a price on technological adoption without necessarily there needing to be companies around it, right? And there are companies around it, but there are networks around this adoption. So it's almost like, imagine if the internet had its own coin in the early days, or somehow if it was tied to money. And then you see that adoption curve with the internet spiking and mass adoption in the S curve, that would certainly change the supply and demand dynamics. And that's the only scenario that I could see that would lead to something like that. I think that's a lower probability. I like to set my expectations a bit lower, so that I'd rather be pleasantly surprised than disappointed, right? So I usually, I just tell myself it's a good way to like manage emotions and be patient and emotionally prepare and be like, you know what, if we chop around for another 6 months, or we have a big correction or whatnot, as long as it's making higher lows and higher highs, then let it take its time, right? Without having to try to like rush things or try to feel more productive, trying to force something in the market, and so far, like, just trend riding this year, I've been doing really well just trend riding, and my entire portfolio it's probably more than doubled since the start of 2019.
Nice.
I did have a bit of a drawdown at the end of Q4, but I averaged down. I stuck to my plan. I went in heavy and I took my shit off the exchanges. So now I could afford to take more risk at the time, because to me the risk reward changed. I didn't want to have money on exchanges anymore. So that kind of changes the dynamic.
And I think that's actually a really good lesson for anybody that was in the room, over the past 6 months of seeing you like actively doing that, right? Because it doesn't necessarily feel warm and fuzzy when you're averaging down, and like you say, when you're swimming in a sea of your own blood, right? Like, and then the squeamy little like trolls like to come out and like point fingers and go ha ha ha, like you're in the red, right? So like it's almost kind of being public in that way, like being transparent with our positions. It's like, not only do you have the capital, but you have like that to deal with. So I just want to commend you on that. And like, I think it's just a really good learning opportunity for anybody that saw that, to understand like how really like steadfast you have to be in your plan when you are buying in a bear market, because it doesn't come as easy as like a 2017 type market.
Exactly. It's like extreme contrarianism, and it's I would almost view it as like a muscle that has to be built up, and it comes with a lot more risk. So the seat can get pretty hot sometimes.
Absolutely.
But I felt it's interesting because, both Decembers, last December and the 2017 December, both felt very similar to me, actually, in the sense that like I felt extreme contrarianism, and you kind of, in a way, you almost kind of feel alone in that, and against the overall market sentiment. And when everyone's like extremely euphoric in 2017, and you're like and I battened down the hatches and just started like sitting in fiat, and like, maybe I didn't sell exact tops on certain coins. Some coins I pretty much did. On like Stellar I did. That was pretty cool. I'm almost on Doge. But, when you're battening down the hatches and you're sitting in fiat and your accounts are in fiat and people are partying and celebrating, and like, everyone's in consensus that 2018 would be like a super big bullish year or whatnot.
Yeah.
It takes a lot of discipline. It's kind of like, I'd almost consider it like, let's say you go to a party and you're being healthier, so you're not going to drink too much or whatever. You're not going to drink, or you're going to minimize calories or whatever, or eating healthy at a dinner, at a buffet, and you're going for the healthier options when there's like tons of junk food or whatever, right? That's how it feels to me, of being a contrarian. So it kind of does take a bit of discipline to be able to get to that point. And
yeah, it's like everybody's like taking shots, and they're like, what do you mean you're drinking tonic and lime? Like, come on, man, party. We're all rich. It's like, actually I cashed out and I'm going to walk over here. And yeah, it doesn't feel good. And that's the thing with trading and investing, man. Like it's not supposed to feel good.
No.
Like if you feel good all the time, that means you're probably just going along with the herd, which is great during bull markets when everybody's a genius. But those people that buy their own bullshit, they're the ones that suffer the most when things do correct. So
yeah, and I find the best like to actually manage emotions, because at those moments in the markets, those peak moments, peak parabola and peak capitulation, the emotions are so extreme on social media and in crypto that it's a very strong river, and that river is going to do everything in its power to pull you downstream, right? And
it's enticing.
It's absolutely. So like last December, people were extremely negative on Twitter. Like everyone was fighting each other. Well, they're always fighting each other and calling each other scams.
Yeah,
it's always happening, but it was so extreme. Like people were tagging the SEC on each other, and like like everything's a scam. This is all shit. It's garbage. Crypto, it's going to zero. They're tagging the SEC. Like, what the it's crazy, it's like, and then, but the year before, it was like S curves and user adoption and new paradigm and screw market cycles and like all this. And it was just so extreme that I find the best way to manage emotions in those situations and stay disciplined and resolved is to actually detach from it and take a break.
Yeah,
it really is, to not just like, like right around December when we capitulated or whatever, and it was like super negative and toxic. I was like, you know what? I need a little break from crypto. I'm going to detach a bit from it. I'm not going to spend as much time on Twitter. I'm going to go take a vacation. January I took a vacation. It's like, don't need to put a lot of mental energy into that to get swept away, right? Focus on other elements of life. Same with the previous December in the Parabola. I had to take 2 weeks off for Christmas from burnout, from like too much bull. You know?
And I think the lesson with Twitter is like, just kind of some general advice for you guys is like, just be very, very careful who you follow on social media, or at least pay attention to. And like, maybe you can be like Rocky, where you follow a ton of people and you use them as like counter indicators if you can like stay objective. But I'm so anti-toxicity, and I hate it so much that I'm like, I just choose to only really pay attention to people that I actually value their opinions. So like, I miss actually probably like 99% of the BS that goes on in social media, but I know it's out there. I just don't want to get distracted. So like, I guess my advice is like, just be self-aware. Like, if you are getting affected by it, know that, and like go on like a social media diet. If you're like, if you got like, if you're like cold blooded and like you just don't care and nothing affects you, then that's fine too. But just be self-aware, right?
Yeah, absolutely. I just to add to that, since we're talking about market sentiment and self-awareness and control. And I absolutely agree with what you said. I think it's a great idea to disengage and curate and just look at, what you just block all that stuff out, not let that sway you. When I do my market sentiment analysis, so what I'll do, these are generally my Twitter rules for anyone who's interested in market sentiment analysis, and also like self-discipline rules too with social media, because it's very easy to like just tweet some random shit and maybe like get in a fight with someone or whatever, right? So generally what I'll do is I follow a wide variety of I guess you could say crypto influencers or people with large followings of every camp. So I've got like, I'm following hardcore Bitcoin maximalists, I'm following Satoshi Vision maximalists, I'm following Ripple people, I'm following degenerate traders, hackers, like just a wide range of people who are generally in crypto. And my rule is I observe, and I generally try not to engage in any of the drama, right? So I try to I just envision myself almost like detached, and I'm just like an observer, right? And I mean, sometimes I get a little bit engaged, like if I see something stupid, I might say something, but I try not to like fight with people, right? And I try to actually not block anyone. I try to accept all of them. And so that like, whether I think they're batshit crazy or agree with them or not, or whatever, like sometimes I'll watch people go nuts trolling, and it is
a good insight into like, because those are market participants, right? A lot of those people are on the opposite sides of our trades a lot of time, actually. So
yeah. So that's generally what I do for market sentiment analysis, and it allows me to stay disciplined and try not to engage with that stuff, which means that if I need to be a contrarian, that to me is also being a contrarian, because it's so easy to engage in all the bullshit. That being a contrarian, training my mind to be a contrarian in periods of extreme price action, extreme emotion, means that I should engage in activities that allow me to do the opposite of that.
It's almost like working out your contrarian muscle.
It kind of is in a sense, and it's really, I think it really does come down to self-analysis, self-awareness, and questioning myself, questioning my own beliefs. Like I never feel too comfortable in anything, and sometimes I will, just self-analyze and try to have self-corrective behavior, right, for bad
Yeah,
habits or stuff like
absolutely.
that.
Cool. So I know we went off on a couple of tangents, but I think they're important tangents that can maybe help you guys. So anytime we see a lesson in the markets, we just like to bring it up. Um,
Consolidation tangents.
yeah, exactly. Yeah, yeah. Whenever the markets are slower, you'll hear more Rocky rants. That's for sure. So anyway, so talking about like the other potential that we were mentioning. So we talked about the 2015 type breakout scenario. Here's the first bubble of 2013. So I said, like, let's assume that, like, if you look at the price action, it looks like it could be kind of similar to right now, right? Where you had the breakout, like say that this was the 6K breakout, you had the run, you had the fast pullback, and then it kind of recovered and you got like a really tight 1, 2, 3, 4 pattern. So like this isn't textbook, but it's more tight where you get the run, the fast snapback, the retest. So if we get something like this, like I would look, this is my personal trading plan. Again, not financial advice. You guys follow your own plan. But what I would do is I would buy the breakout of this, but I would be uber tight with risk management. So like the faster the breakouts are, usually the faster I'm taking profit and the more obsessed I am about like stops, because when things start to get parabolic, they can go much further than you think they would, which seems rational, right? Like here, I mean, going from 200 to 350 was a big move at the time, but you can see the parabola actually dwarfed that. Yeah. Right. So that's why you never want to underestimate how far these can go. But the faster price starts to speed up, the more, like, I guess, paranoid you could say I get with the price.
Yeah.
So those are kind of the two bull cases, right? I think it's either, a 2015 type breakout where we're going to get, multiple weeks or months of consolidation, and then a much bigger, more sustainable breakout for a longer term bull trend, or more of like a 2013 type setup where it's a faster one and we go parabolic earlier, right? So again, like for me, if we check, like say today is the low, and then we start to squeeze back up into 8,500 and we get a high volume break of 8,500, I would look to buy that. But I would be kind of mad, because I'd be like, all right, well, for the next several days now, I have to like really be dialed into price, right? Because it could definitely like spike up, tag 10K, and then do like a fast V top. Right. That's definitely a possibility, because we got the red wall of death that we're coming off of. So after kind of a phase, we had a really short, in my opinion, this was a very short phase one. This could be the early signs of phase two. The more consolidation, the better for the sustainability of the trend, and usually the longer that trend is, right? Where like if we just spike up, go parabolic, and then V top, I'd be like, all right, well, now we got to wait and see what's going to happen. So if we get a nice pullback inside zone one, say we turn 7K into nice support, could be a good accumulation zone. And or if we get a retest of 8,500, the longer the consolidation and the more touches of resistance, the higher the probability and the bigger the breakout typically. Or again, let's not be one-sided. If this is the mother of all traps, where 8,500 turns out to be the high, and then for whatever reason we get strong selling, it could be a black swan event, it could be just systematic selling from any bag holders, whatever. If we do get below 6K, I'm going to be really, really cautious with any kind of dip buys. Now, with that said, if we do get, see from where we are now, or let's draw it from the highs. So from the highs, that is about a 30% sell off. So like say we do get a fast intraday or 1 to 3 day panic of 25 to 30%, that could also be a nice shorter term dip buy, right? And Rock, I think you said you were looking for that possibility.
Yeah. I was thinking mostly like I don't think I'm not gonna buy any more Bitcoin on spot or anything like that. So I've pretty much, my bags are loaded and I'm satisfied, or I have enough risk exposure to crypto. But as like for me in this bull trend, if there's a dip buy that screams at me, I have a bit of Bitcoin on BitMEX, and I'll probably take some leveraged longs here and then just to spice it up. If there's money on the table, I might as well do something, right? So that's kind of the way I see it. Like if we go into if we continue with these higher lows and such, I'll probably, and that's a higher risk approach. I don't recommend anybody necessarily use margin if they're new, and to use low risk and to manage it and all that kind of stuff. But the way I see it, like if I see any dip buys that scream at me, like what you said, like a huge candle, big red candle or something like that. Like if I was awake and I could have caught the near the base of that other dip as it was wicking up, that probably would have been a really nice bounce play. But I don't imagine there was a ton of time to be able to buy at that lower level because it bounced so quickly. But those are the types of bounce plays that I really used to love dip buying, because they moved so fast. I didn't have to wait around for the bounce forever. And it's nice to see that we're getting those kind of bounce plays again, because that is something that has really shifted in the bear trend. The last like really nice, sharp, clean, V bottom bounce play we had was right around the April time, right? And then after that, you can like that was like to me that was like the easiest bounce play of 2018. Then after that, every bounce play ended up with like this smaller like sideways accumulation consolidation where it made at support, which made things a lot more uncertain because it took a while for counterforce to kick in for momentum to shift directions, right? So I caught a few of the other bounce plays as well, but then they just got weaker and weaker and just dribbled and went sideways and grinded down, and that from that point the bounce plays have been really weak, including the capitulation bounce. I mean, that's the most pathetic capitulate. Like in 20
that was weak as crap.
That was really, really weak, which is like really, I think, threw off a lot of the markets, right?
Yeah. And it was difficult. Like in hindsight, it's easy to look back and go, oh, the low is 3,200, but there's nothing about this price action until this break right here that said that this was the low. This was, to me, this is the most difficult TA of any accumulation pattern that I've seen since I started trading Bitcoin.
Yeah. Well, whereas like in 2015, when we capitulated down to 166 on the Bitstamp pack, the price doubled the next week. Right?
Yeah, it was like easy. This was like beautiful. I remember we had 17 hours down here too.
Yeah, exactly. And so like one of the reasons I was loading so heavy on the front end of that dump was I was initially gunning for that bounce, that V bottom bounce play, right? I like at least thinking it would tag 6K, right? To retest prior support as resistance, then drop back down, then maybe go back to the lows and chop around or whatever. So that's what I was anticipating in my trade. Yeah. And that didn't happen.
and then it gave us this head and shoulders right here, which this is where I was also accumulating. And then that just kind of fizzled out and we were like, what is going on? And then it's like, oh, okay, well, we have 3 or 4 touches of 4,200. Maybe that's the break. Yeah. And then finally it gave it to us. But it was like, it was like basically 2 false reversal signals and then like more chop before the final turn.
Yeah, you know that kind of almost reminds me of not necessarily the way the market structure of that looks, but just a sentiment around that. What that kind of reminds me of is in 2015, after the first, remember before the second drop, where there was that Bitfinex glitch and we dropped down to 166 again? Yeah. Remember that rally before then? It looked like we're actually gonna break the all-time highs. We were breaking the all-time highs. We were breaking out on that, right? And so people thought that was it. We were now breaking out of the accumulation range, and it basically trapped people. And not only did it trap people, but it capitulated a second time down to lows. Which, if people thought the first capitulation was really bad for him, by the second one, like a lot of traders and investors seem really crushed because that was like they had this false hope that it was breaking out, and then it
Yep.
wigged down, right?
This was definitely the mother of all traps because it actually low ticked the low on Bitfinex. I don't think it did on Coin. I don't. Let me see. Did it on Coinbase? I don't think so.
I don't think was Coinbase. I don't think GDAX was it around then. Oh, I think
No. Yeah. Well, Coinbase was really just kind of,
yeah.
but yeah, Bitfinex was where I think most of the USD was being traded, and yeah, it was the trap and then washout. But that was a flash crash that was caused by I think a trading engine glitch, right?
Yeah, yeah, you couldn't close your you couldn't close your orders, and,
Yeah.
and instead of not just being able to close your orders, when you hit close, it would open up an equal and opposite order.
Oh yeah.
So it was just chaos. It was chaos. But that was it. That was the big event that we springboarded from that into the next bull trend. So
Yep.
what was interesting is that this time around there's similarities, but there are differences. And
Yep.
so that's kind of interesting because even though from a TA perspective, we learn from the past about market behavior and what to expect because oftentimes we see very similar fractals or we see very similar market behavioral patterns because the markets can only move in certain directions, up, down, or sideways. But it did it differently. It didn't make it too obvious. It wasn't like you
Yeah.
could just take a cookie cutter model and fit it over and just map it out based on the previous cycle. So it structurally it was a little bit different, including that large descending triangle. There was a lot more volatility in 2014 and a lot more. There was
Yeah,
consistent
we
lower
had
lows too.
we had at least half a dozen like really beautiful breakdown short trade setups in 2014 where it was just like a squeeze into support for what 8 months.
Yeah, yeah. The last quarter or 2 quarters were not as eventful as the first half. The first half of the bear trend's always the most exciting. I was actually like I was very excited and FOMOing when we were crashing and stuff on the first half because of those nice V bottom bounce plays, which are my preferred trade setups.
Yeah.
Just because they move so bloody fast, and usually
Yeah,
like
you don't have to wait a long time for them to play out.
yeah, it's like you're scuba diving almost. Like you might like I might not nail the bottom right off the bat. I'll buy and then it'll dump more and I'll average down and it's like I gotta hold my breath for a bit until it bounces up. or maybe scuba diving
Just
is not
don't
the
pass
best.
out on the way down.
Yeah, like deep sea diving without a scuba.
Yeah. Okay, cool. So that's Bitcoin, guys. Hopefully that makes sense. I want to talk about my latest trade alert with Ethereum and also just kind of the capital flow of what I was expecting and what really hasn't happened yet. So we talked about this, I think last week or the week before that, kind of how capital can flow during usually during bull markets. So like step one is you'll have a big bull run on Bitcoin, right? So I consider a big bull run like over 50%, which this last one was about 100%, right? From like 4K to 8K. And then what happens is there's profit taking on BTC. So, right, like anybody that was buying down here or that's a bag holder starts to sell, right? And so usually what happens is when you get this first sign of selling, what we can see, it doesn't always happen like this, but this is kind of what I was betting on, and it hasn't really played out quite yet. Which is number three is you'll get like I hate the term alt season for some reason for this example, but really what it is like you'll get like alt bull runs because some people sell into alts instead of fiat or stable coins, right? Like a fiat stable coin. So, oh crap, I just deleted that on accident. Anyway, hopefully you guys saw that. Step one, you get a big bull run. Step two, you get profit taking. Step three, you get a bull run in some altcoins because people take profit out of Bitcoin and not everybody sells back into fiat. Does that, Control Z, let me see if that'll work. Hey, it worked. Thanks, guys. Does that make sense though? Does everybody understand kind of the basis of like how that capital can flow? Cool. Okay, just want to make sure. So what I've been expecting is after we had the big run in Bitcoin, I started hunting, and my first kind of target is usually Ethereum because it's the second most liquid. And then that's why I bought the breakout here below 200 and started running some measured moves, and then took some profit at 265 as we had the third green day into strength, right? So I didn't get the exact top, but I got pretty damn close to it. But I only took about 10% of the position off of the table. And the only reason I did that was because it was a measured move from this consolidation. So basically this channel stacking on top lines up with the prior support turned resistance at 260. And so you can see up into that point, we actually had increasing volume. And then you can see it's basically just been consolidating here, and the volume has fallen off of a cliff. So it's got me kind of scratching my head going, okay, are we actually going to get the follow through, or is this going to just basically be like a dead cat and then kind of fade off? And what I've noticed is instead of us getting that kind of predictable capital flow, like I just mentioned, so instead of this, we're starting to see, well, not starting, it's actually kind of been this way. I'd call this like 2019 capital flow so far is most large cap alts are just tracking Bitcoin, right? So we saw this in the early days of Ethereum. If you kind of look at the first year of Ethereum's publicly traded price history, so after the ICO and once they got listed on, what was the first one, Rocky? I think it was Poloniex, right? Poloniex or Bittrex or something.
On Ethereum, for Ethereum?
Yeah.
Yeah, I think it was Poloniex.
Polo. So anyway, if you guys can do the historical work on this if you want, but just go back and look at the first year and then kind of compare it with Bitcoin, and you'll notice that there was a time period where Ethereum was basically just tracking Bitcoin, and then there was a switch, and then it moved inverse to Bitcoin. So it was like when Bitcoin would sell off, Ethereum would gain, and vice versa. And it was like most market participants were trading against one against the other, right? And then something really weird happened where they became completely disjointed, where you really couldn't make sense of it. So right now, I think because we're at kind of a key level, and there's just not as much hype around altcoins right now, I think Ethereum is just kind of trading, I guess the best word would be a little scared, where it's not really taking on a life of its own, meaning people aren't like selling out of Bitcoin and like trying to aggressively buy Ethereum. So therefore you can just kind of see, like, when Bitcoin goes up, most altcoins go up. When it sells off, most just kind of sell off. So I would say that I was incorrect in my original thesis of expecting Ethereum to kind of get another immediate push to 300 or more. If you look at the price action though, it's still kind of holding up. It's basically, consolidating, and 250 is kind of a strong magnet right now, which a magnet, for anybody that doesn't know, is a price level that where when you get above it, it pulls back to it. When you get below it, it pulls back above it. And then, so basically we're just kind of squeezing and consolidating here. So what I'm going to do, kind of my thought process here, is I'm going to be watching this zone kind of closely. And if there's if there's signs that this thing is just kind of fading off and there's really no buyers and Bitcoin starts to pull back deeper, I'll probably just adjust stops and maybe take a graceful exit. I'm not going to take a loss on this, meaning I won't let it come back below like 190 on me. I'm going to close before then. But if it can hold up, which I still think is, in my opinion, the most likely scenario, until I see something that changes my mind, I think the probabilities are to the upside. But my original thesis for why I thought that was going to happen just really isn't playing out like I thought it would. So I'm going to be a little more conservative, I should say, with my risk management on this. So
Yeah, for sure. And sometimes in alt bull markets, sometimes Ethereum could lead altcoins and take on a life of its own as well, or it has before. This time it doesn't seem to be doing that. What's interesting about this setup is it's actually very similar to the Bitcoin setup that you took, except that this has Ethereum has been on a lag or a delay. So it's almost like you can kind of see the path of where it wants to go based on a delayed correlation with Bitcoin, which is almost another type of indirect arbitrage when you think about it. It becomes a lot more obvious what the setup is and the path of least resistance.
Because the Ethereum breakout actually started to happen on the 11th, and the real actual confirmed breakout didn't actually happen until Bitcoin was tagging 8K. So in a way, it actually did what I thought it was going to do, where like the selling pressure on Bitcoin caused the breakout, but we're just not getting like follow through.
Yeah, exactly. And that breakout's very similar to the April breakout on Bitcoin, the first one, on those higher lows on Bitcoin.
Yeah, because May 14th? So yeah, it literally was as Bitcoin was snapping above 8K on this green day. That's when the Ethereum triggered. So yeah, in a way that happened. It's not giving as much follow through as quickly as I thought it would. But I guess, I can't place my own time goals on the market. Just got to let it play out.
What's interesting in inverse, another example of where I saw this happening. So this is something to take note of in future when certain coins are taken off, or any of the larger coins are taking off. If any one of them happens to have similar price structure as all the rest of them, but leads over the others, it can show path of least resistance and where the market wants to go. Another example of this was Litecoin. Back when it was tracking Bitcoin perfectly during the bear trend, except that it broke down its descending triangle first before Bitcoin and had a slow bleed and slow grind down, and Bitcoin was still in its descending triangle, right?
Yeah.
So, one could have been able to look at that and said, this is the path of least resistance even for Bitcoin. Now, Bitcoin didn't drop that low because it's more liquid, and like Litecoin's an altcoin, so you got to take that into account. Just much less liquid than Bitcoin, and it's not necessarily the dominant market, whereas Bitcoin is. So sometimes, like when I see that, and even for alt season or whatnot, and you see a lot of similar lower accumulation, sideways chop accumulation, and then you start to see a few coins just like having these wild breakouts and going parabolic out of nowhere, right? I call that like the popcorn effect. It's almost like warning signs that there's likely money's gonna cycle through, and this will happen to other coins and other markets that have similar structures. So that's a
really good point. Yeah, it's almost because it is capital flow into crypto.
Yeah.
Right. It's like I guess like maybe a way that we could compare that in metals. And I don't know if this is actually how it works. Probably not, but I'm going to make this kind of silly example anyway, is like palladium has been on a run, right? It's been on a crazy tear. Hit 100% extension up here at 1500. I was actually thinking about trying to find a way to short this, but I was like, Anyway, 100% extension, right? Palladium was taken off, And I'm like, why is palladium taking off? There's a fundamental story. I won't go too deep into it. It's about electric cars and basically, platinum kind of falling out of favor, right? And I've been buying some platinum down here.
Yeah,
and I'm
same.
like, okay, well, if people are taking profit out of palladium, and maybe companies are going to start trying to find a reason or a way to make platinum more relevant in electric vehicles now instead
Yeah.
of palladium. I don't know anything about this stuff, right? I'm just like, I was just kind of thinking about some crazy random scenario. But like, if you have a lot of palladium supply that comes on the market because the price is higher, which typically happens in commodities, maybe it could go into platinum. So I started buying some platinum.
Does that platinum chart kind of look similar to the 2013 Bitcoin chart to you? Or is that just me?
Yeah. Like kind of that first bubble.
Yeah.
Except this is like from the 80s, right? This is why like metals are so boring to trade.
By the dip, averaging down over the next 2 years.
Right. Hey guys, we're gonna do our next metal trading update in 8.5 years. We'll be
Stay tuned for it to take profit in 8 years. We're gonna have an update once a year on metals.
Yeah. But so anyway, like kind of like Rocky's popcorn effect, like you see that sometimes in commodities. You also see sympathy plays like that in stocks. Like we saw that in marijuana stocks, right? Like some of the higher quality ones would start popping off, and then you'd have traders going, well, what else is there? And they, they're like crack addicts. They're like looking for the needle, like what can I get next? Right. And then all of a sudden you have these like lower quality projects that you're like, wait a minute, that company's not worth $1 billion. Right. But it's just market sentiment and irrational buying that drives those things up. Yeah. So you can profit off of these random popcorn sympathy plays. And you can see signs of leading and lagging markets, right? So it's just kind of interesting. I don't know. Yeah. We geek out about this stuff. I feel like the more you are truly interested in this and the more you geek out on it, the more money you're going to make, because the more dialed in you're going to be and the more opportunities you're going to be able to see.
Yeah, and it also shows the variety of different strategies that people can apply. There's many different ways to make profit in these markets, many different time frames and types of setups, and people just got to figure out what's right for them, and maybe they have to play around with a few different types of strategies to figure that out and get the experience of it.
Yep, good point. All right, let's talk about XTZ. So just kind of watching here, let me do this. There we go. Watching the price action, bull trend still intact. Got, support, resistance, market structure looks just very pretty on this chart, in my opinion. Kind of consistent volume, nothing too big or telling over the past few days. 150 prior resistance turned support now. We've got something, Rocky, I think you said May 28th, right?
Yeah, we have the first
May 28th or 9th?
20. I think it's 28th.
Okay.
Or maybe it's 20. Let me
anyway, it's about like right here where this line is.
Oh, it's the 29th. Okay, yeah.
29th.
It's the 29th. So it's the first protocol upgrade based on their voting system, and apparently this will be the first time this has happened in blockchain history. So they're not using a hard fork or anything like that. It's just self-updating blockchain with like core protocol rules.
Cool.
Instead of just layer two or smart contracts, which this will definitely draw some attention. It's going to get a lot of media coverage when that happens. We'll probably get a lot of mainstream media coverage. What I anticipate is one possibility is we might see it ramp up leading up to it, and then you might have some whales maybe doing a sell on the news like they always like to do. If it does, especially if it goes parabolic. If it consolidates, there might be some sell-off, but if it starts to not go parabolic, but if the candles start to get larger, because I don't think it's anywhere close to being parabolic right now, but if the candles start to get really massive leading up to the news, if there's any last minute FOMO into it for whatever reason, then to me that's like that's not necessarily average retail getting excited about it, that's likely some manipulation and maybe even trying to attract players and larger players doing that. That's what they sometimes do and selling the news. But as far as like the larger, bigger picture is concerned, I think that if we blow past that, it'll get a lot of media attention if it succeeds. Obviously, it's all still experimental, but it'll get a lot of media attention, and that could put it on the map of more everyday retail investors, coming into it, right?
Yep.
And being able to have.
Where are we at on the coin market cap? Let's see, 16. Okay. So if it did break out, let's say it got to like 250, that could put it somewhere close to the top 10.
Yeah. For sure.
Interesting. Yeah. So like, I don't know. I was just kind of thinking through some price action scenarios. So we've got, 5 or 6 days till that. So like, say there is some kind of parabolic run. If we break outside of that resistance and then we hit that, that measured move that I had marked up somewhere in like the mid 2s to 300 or 300 to $3. Yeah. If we hit 300, I'm just going to buy Canada.
You're like, I'm gonna take some my first profit target here at 300.
Yeah. No, if we get overextended prior to that, knowing that that's coming, and especially if the major media outlets pick it up, I'm going to take at least my cost basis out. That way it's a free trade, maybe even a little profit.
Yeah, for sure.
But yeah, so that's it. The other scenario, because at least for the past few days, I've noticed that this somewhat tracks Bitcoin.
Mm-hmm.
If Bitcoin does a deeper pullback, and like say we wake up tomorrow or hell this afternoon, and we see everything is red and more bloody than it looks right now, right? Like everything's red, but like say we're seeing like 10 to 15% or more down across the board, that would probably just cause, because this is so illiquid, a deeper pullback. Like I've said for the past couple of months, my risk management on this is more so an accumulation play than a trade. This bull trend doesn't have to stay intact, and in fact, if it collapses, oh well. I'm trying to be patient with this longer term. So
yeah, I'm this is definitely a patience play for me. As long as I keep on seeing, nice growth and good things in its ecosystem and innovation and all that kind of stuff, and also sticking to the principles of decentralization, or working more and more towards those goals. Because I don't think decentralization is an off or on switch per se. It's more of like it's a thermostat, varying degrees. One could certainly always get more decentralized,
Yeah.
So, but
I would actually prefer to see a couple of weeks of consolidation. And even if it didn't go, I guess that's another possibility, Rocky, is like if it doesn't go parabolic prior to the news, but then like say it kind of works up into resistance of the all-time high here on Bitfinex.
Yeah.
And then like the news comes out and the release comes out and people are like, oh, cool, this works. It's not a complete disaster. And then the media picks it up. That could actually be a trigger for a 180 break.
Yeah.
So that's something to think about too.
Yeah, absolutely. Absolutely. So for the market structures, really is technical definition of a bull trend. I mean, it's higher lows and higher highs, and it's very clean throwbacks to prior resistance to support.
Yeah.
I just haven't seen anything too crazy that screams at me like, oh, you gotta, and that doesn't mean that some whale can't dump it into the dust or whatever. I'm sure there's all kinds of whales that have enough coins to trash the order book. That's certainly possible. But aside from like random variations like that, right now, it seems like it's in a fairly healthy trend. And it's when actually look at Matic. Here's an example of like what screams at me to take profit, right? When I see something stupid like this happening,
You want to look at the BTC chart or?
We could look at both of them. They're both
Okay.
they both went batshit crazy. So I remember on the front end of that when I just saw the on the 1D charts where it's just two massive one green candles before it actually
Come
crashed.
out on the parabola or
Yeah,
back here?
yeah, no, right on the parabola. It's like
Mm.
if I was in this market, just remember how we talked about candle sizes before, how they keep growing and getting larger and larger
Yeah.
as the trend becomes a little bit more exhausted. We could kind of see, at least for this mini parabola, maybe it does something on a larger trend because we've also showed how it can scale and the candles can get bigger and bigger and you can keep having these runs. But when I see a massive candle like that and huge gains and tons of volume and FOMO and all that stuff, those are the types of scenarios that scream at me like, take some profit off the table, take something off the table, right? So, well, I haven't seen that on Tezos yet. It doesn't necessarily mean it's going to happen anytime soon or
Hmm.
whatever. But I've kind of just been seeing more of that stair stepping, and you've seen that earlier trend in Matic is obviously a bit of a faster trend there in the front end, but you could see it just kind of has these nice little throwbacks, had that lower accumulation, had these nice little throwbacks, and then it's when it broke out of the all-time highs, you could see that it started to accelerate until it was in like full FOMO, and you just had these massive
Yep.
candles. And I wouldn't even be surprised if there's even a bit of bearish divergence on those two green 1D candles. But
Yeah. Yeah. Debbie said full market cycle in 21 days, at least on the front half. Yeah. Cause, and this is what can happen on like really early coins, right? Like the first cycle is typically really fast.
yeah,
So you got, accumulation, started on what, April 19th, and then finally broke out. Yeah. Literally like 1 month of accumulation, and then only like a couple of weeks of the trend. And then parabola was what, 2 or 3 days? Not barely even 2 days. Jesus, that was fast.
nice little bounce play on the first crash,
Yep.
right?
There's your fast crash.
Like when you have like some of the best bounce plays, the two types of best bounce plays that I found are the first big crash on the parabola, because it usually like there's usually so much money sloshing around, so much volume and so much emotion that oftentimes, if you catch a dip at key levels, there's often a dead cat bounce, and the dead cat will usually produce a lower high, but there's usually a nice dead cat bounce, and that's Bitcoin had two of them, one at 10K and then the 6K one, and I caught both of those. And so I find those tend to be very for me good bounce play setups, and a little bit more probabilistic, as well as capitulation ones. When a market like is being sung off and it has a massive capitulation for whatever reason, unless the coin's being delisted, then you probably don't want to touch it.
You learned that lesson the hard way.
Yeah.
Okay, cool. So the only other one that seems interesting, we still got Binance broke a new high.
It's a beast, man. It's a machine.
Yep.
CZ's
Dude, I'm
just
telling you, the real exchanges, and I it's a shame that I even have to like preface it with this, but the exchanges that actually trade real volume are the ones I'm interested in.
yeah.
You got all these, volume fakers and like little wannabes, but the ones that actually kick off cash, they can be great investments. Unfortunately, Kraken, even though they're raising their private or what is it? They're not doing a STO. I think it's just a typical Reg D angel round, if I'm not mistaken. But however they're raising it, like the valuation to me is just way too high. Otherwise, yeah, I'd have gotten in, but $1 billion plus valuation, I'm not interested in.
They sent another round of emails. This time they lowered, still for accredited investors, but they lowered the investment amount. Before it was like minimum 100K. Now they lowered it to 1,000, and they're raising it on Bank to the Future. Have you ever been on Bank to the Future platform, or do you have an account there?
Not in a while. No, I haven't looked at it in quite a while.
I was actually tempted to go through whatever accreditation process to get an account there, because
Do they allow U.S. citizens? Do you guys know?
I I think so, yeah, because
I
Kraken's
can't
an American
remember.
exchange, so I think so. I think they do. Bank to the Future, maybe I don't know. I haven't.
I'll have to look again. I haven't looked at it in so long.
So
Oh,
I'm actually tempted to invest a little bit of money in it
yeah,
since they lowered it. I wasn't so keen on dropping 100K, but now that I can kind of control the amount, I would maybe take a stab at a smaller position size, even though it's got a really high valuation, just because I like the exchange, and I kind of like the idea of having skin in the game on an exchange that I actually use, at least for cashing out or whatnot, or
yeah,
buying in. But I wouldn't go hog wild on it, you know.
yeah, yeah. Harry, I have like a cold storage small position on Binance, but I don't have an open trade. This reversal is like so aggressive, and just even now it seems like so overextended, going from 6 to 30 like that. Like I don't know. I couldn't really find an entry on like some kind of 1, 2, 3, 4 breakout with good risk to reward, and that's okay. Like I used to get really irritated whenever I saw a market that would like take off without me, but like Buffett says, like you don't strike out for the swings you don't take, right? Like you can let stuff go by and go, oh, okay, that worked out, but like you don't lose because you don't get in a position, right?
Yeah, and sometimes you get markets that go on these crazy bull runs, and it's just the price is too high. It's like, yeah, it could go up higher, but the risk reward kind of sucks right now, like, because
Yeah.
it's gone up
And
so
then you
much.
watch it for several weeks and it keeps going and keeps going. And then you can't take it anymore. And you take out your credit card and you take a mortgage out on your house. Next thing you know, you go, how did I buy Bitcoin at $20,001?
And then you get a note, congratulations, you're a meme. You've been memed. Yeah, no, it's true. And so that's also a part of the emotional discipline and
Yep.
mental management, is like sometimes you just have to be comfortable in letting some markets go and be like, meh,
Yep.
it's not my setup anymore. It's too high. Could keep going up higher, and if anyone's in it, congratulations, but whatever.
Yeah.
I'll keep hunting for something else. Not my gazelle, right? If you're hunting, and if you're a lion in the Sahara or whatever, it's like whatever. Just hunt for
Or,
another
or you
gazelle.
could have position envy, like all the guys that I know that got a fraction of a percent of Uber, and now they're just smiling, just waiting. Anyway, okay, so bat. This is one that I started to accumulate down here, as you guys know. I think I was getting fills in like the 16 cent range. Um, I haven't taken any profit. I don't know why. I just I'm looking at this. So okay, let's think about what the product is. So it's a token that is kind of tied to the Brave browser. And I'm looking at this going, okay, there is a lower there's a possibility, but I think the probability is low that it's going to take significant market share from like Chrome and Firefox. But in the event that it does, if the low probability scenario plays out, I want to have some of this. That's really the extent of my thesis on this. Like, I don't have a huge position. I really don't care much about what the price does in the short term. You can see, I mean, this is still, I consider this like accumulation price pattern, right? Where like you've got a lot of resistance here through like the 50 cent zone. It could consolidate for months or years, or fade off and break the 10 or 11 cent low or whatever here and just fade off. I don't really care. If let's say it does consolidate though for a couple of months and there's fundamental news where they actually come out and they're like, hey, this is working, we're taking market share, and price reacts to that, I would likely add to this position. But I kind of look at this like my early Ripple accumulation, where it was like, I don't really know what the expectation of this is. It's a half a penny right now. The price action is not clear to really trade off of. So I'm just going to have some, right? And then when it went to 30 cents, took profit, scaled back in, actually bought the 30 cent breakout, traded it to $3, right? So like I kind of look at it like that. But as far as a time horizon goes on this one, this could take years to play out. So
What about that? What about that bat tattoo you got under your left eye?
yeah, I got the Brave browser just spread across my chest.
A neck Brave logo. Was a Leo, the Bitfinex one. So they've got a similar. Someone's mentioning they have a similar thing as BNB right now with that $1 billion IEO they raised. Now, it was dollar. Do you have a Leo chart by chance? I'm curious what the price is right now.
Not on here. Let's see, is it listed on CMC yet?
Yeah, just want to see. It was $1 during the ICO. Now the price is. Did that just? No, sorry, that's not it. It's not Leo coin. Sorry. One second. Let me just.
Yeah, I haven't been paying attention to the
listed
IEOs yet.
So that one comes with a lot more risk, just because of all the stuff around, their court battles with New York and stuff like that.
Yeah,
obviously, like if they ever got shut down or whatever, then you're looking at like a complete loss.
Right.
But I was thinking about it. It's like if it ever dropped below, someone's saying the price is $1.11. If it ever dropped below $1, I might be tempted to take a punt with an all or nothing type play, just in case it ever ended up like a BNB type thing. But I would go into that position and position size accordingly in my mind, knowing that it could go to zero. And
right.
So that to me is like a different type of play. That's again like almost like an early startup investment. Although in some ways, like these are kind of almost better than early startup investments, because with early startup investments, you might not even have access to a market to even sell it for for years. Sometimes.
Yeah, and it's only trading like 1 million or 2 a day. Maybe up to 4.
Yeah, I kind of see it as like a futures market on taking a bet whether or not Bitfinex will survive this or not.
Yeah.
That's really what it is. It's like you can't get you can't necessarily get liquidated per se unless Bitfinex goes bankrupt, and then then it would be like, so that would be equivalent to like keeping your money on an exchange. But if they went bust, maybe even the larger crypto ecosphere might even have bigger growing pains from that because of the whole Tether fiasco, right? Tether's providing a ton of market liquidity right now.
Yep. So here's kind of my, I guess, philosophy on these super early coins like this. It seems like every year there's like a new flavor. There's like, 17 was the token, right? This year it's the IEOs. Next year, who knows, right? Like,
yeah, it is IEOs this year. Everything's all about these IEOs, right?
Yep.
Which are sketchy, questionable from a legal standpoint. Bitrex IEOs have performed horribly. Binance, they've performed better on Binance. And, for this one, well, who knows how it'll perform.
Yeah. And so Roy just said, the purpose of the Leo is to cover the missing funds for USDT. They've managed to raise $1 billion in private sale in only a few days, which was impressive. I agree with that. Again, it all comes down to a few things. Number one, what's your risk tolerance for stuff like that? Number two, how much mental bandwidth do you have for stuff like this? So like for me right now, I'm spread pretty thin and I'm trying to simplify stuff. So like, Rocky and I have been working on the new boot camp for you guys, which we're kicking off this week. I'm like spread really thin. So what happens is like during times like that, if you're like working a full-time job or like say you have something else that you do outside of this, you have to take into account mental capital. And the thing with early new stuff like this is it takes time. right? It takes bandwidth over months. So for me, and this is even how I played Ethereum in the early days. Like I didn't even buy the Ethereum ICO. I waited for it to get listed, and my first tokens I bought at $1.50, right, on the first breakout. I did that intentionally to save myself mental bandwidth. So I'm doing that again intentionally with these IEOs. I'm like, all right, let's wait for some price discovery. Let's let, everybody rush in and throw their money at it. If I get left behind on certain deals, okay, whatever, no harm, no foul. If I have mental bandwidth when the market does start to pick up, I like to step in. That's just that. And again, that's actually what I did on Tezos as well. You guys notice, like, I didn't buy the ICO. I didn't buy any of this stuff. I waited for the trend to begin. So, and the reason why I point all this out is to just say, like, it depends on what your trading style is, right? Like, are you somebody who likes to get in on the ICOs or the IEOs or the STOs or the whatever O's early? Oh, and do you have a risk tolerance and a time frame for that, or would you prefer to wait and save time and potentially pay a higher price, by the way, right? Like I don't mind paying for confirmation. I could have gotten in Ethereum lower, right? Oh no, I got it at $1 or $2, right? Like to me, that doesn't matter. If you're going to hit a bull trend, you can wait until the price has discovery. So
yeah, exactly. And then there's also, if you're buying it during the ICO, or you're buying it on the initial exchange listing, or you're buying it, when it looks like it's an accumulation, there's still no guarantees that by doing that, one's going to buy closer to the bottom, right?
Yep.
Like, so, I think even both our fills are probably similar. Even though I bought a ton at the lows, even though I got in the ICO at 50 cents, I also did buy some before it dropped as well. So by cost averaging, our entries were probably very similar price wise, or cost average was very similar. It's just two different like styles of going about it, kind of like, yin yang type of thing. And both actually at the moment are equating to the exact same thing as far as percentage gains and so on and so forth. But yeah, when you buy on the breakout and there's momentum going, then you actually know the market's moving. You don't have to wait around and, take a vacation or whatnot for it to do something.
Yeah. And I think it's good that we kind of point out the differences in trading styles, because like there literally is no single right way, right? Like you can approach this in different ways, but you guys have to answer that question of like, what's your risk tolerance, your time frame, all that stuff. So yeah, John, we did see the news. I actually had it pulled up here. You can pay your phone bill with Bitcoin now through BitPay on AT&T. Choose the BitPay option. You can cover your bill. Yeah, so this is actually pretty interesting stuff. We saw, what's that app? Spedden, SPEDN, Spedden, which basically does instant conversions, and they link up with a bunch of merchants now, so you can like technically spend Bitcoin at Whole Foods and stuff like that.
Yeah, that's pretty huge.
Yeah.
And these are all steps in the right direction. And it's one thing that we've been reiterating a lot, especially like over the past, even in the previous lows and in December and so on and so forth, is my favorite time in the markets when you have these low prices. And to me, low prices just like more reasonable, grounded prices instead of like super inflated prices, and really, really bullish fundamentals. That tends to be my favorite spot in the market. And every week we just keep on seeing more and more news. It's just a constant trickle of watching crypto moving into mainstream society. And it goes back to that whole supply and demand dynamic. So
yeah, I agree. And just talking about, I guess, market sentiment right now, it does feel kind of similar to early 2016, where we're seeing like bullish fundamentals, but even like the negative stuff, the market just seems to kind of shake off right now.
Yeah.
Like the Bitfinex issue, the Binance hack, all that stuff. Like we saw that in 16 as well. And you're like, man, this market just doesn't care about bad news, where in 2014, it was like every time something bad happened, everybody would panic.
It's true. It's true. We had what? We had the Bitstamp. Not the Bitstamp. We recently had the Bitfin. Okay, so what happened before the breakout? Let's talk about some of this bad news. We had Bitfinex getting and Tether getting sued by New York,
I
right?
think it was that day right there, right?
Right.
Or
And
wait, was it that day or was it this day? One of these red days.
yeah, exactly. And so that was like the end of the world, market sentiment wise. That was pretty scary market sentiment wise, but it was just, hey, thanks for the dip type of scenario, right?
Yep.
And then you had the Binance hack with another little tiny shakeout, another dip, and then it
Yep.
just keeps going up higher and so on and so forth. You've had Cryptopia, Quadriga hacks, quote, closer to the bottom. And the market just kind of like shakes that off. You even have a guy in Congress right now who's trying to make Bitcoin illegal. He's trying to pass a bill to make Bitcoin illegal. But he's been like a hardcore naysayer for forever. He's like a Rubini type, right?
He's like the true definition of the old guard. Like what he's been a congressman for, what, 22 years or something.
Yeah, yeah. I don't know a lot about
Talk
him.
about the establishment.
Yeah, yeah. So, and it's just the market's just kind of shaking all of it. Like it just doesn't seem to care that much, right? And even at the lows, we kept on having a lot of bullish news, but it wasn't, the markets weren't responding extremely bullishly either, right? So now I think all that bullish pressure, the market's finally starting to catch up with what's going on. Like, oh, there's actually a lot of stuff happening here, and it's become a lot more mainstream, and it's almost getting to that point where, like, once it goes mainstream and it's tied into the fabric of the economy, they won't even be able to make it illegal without damaging their own economy, right? So there comes a tipping point where they can't even do that anymore. I already think we're at that point in some ways, because we're doing a lot better than we were in 2014. Things are a lot more clear and certain, and we have making it for them to try to make it illegal would, too many pockets would get hit on that for that to happen. There's too many. Once bigger money gets into it, it kind of almost like seals the deal in a lot of the ways, right?
Yeah.
So, and what I like about that is,
I think we're way past that tipping point.
yeah, and what I like about that is that, Bitcoin's got something for everyone. If someone wants to be a crypto anarchist, they can go ahead and do that. But if they want to play in the legacy markets and do it legitimately, they can go find that now too, right? So
Yeah.
and that's really kind of the nature of a technology or a tool. It shouldn't have all these necessary political definitions tied to it.
Yep, agreed. All right, let's do some Q&A and then we can wrap it up. So Dan, Chris, during this bull trend, will you still limit your swing trades to no more than 10%? And what do you anticipate the percentage of alt? Oh, wow. Yeah. So, I mean, just as a general rule of thumb, I don't like any one of my positions, like a swing trade position, something that I'm holding for multiple weeks or months, to exceed more than 10% of my risk capital for crypto. Right. And that's a general rule. So like what can happen is I can get in a trade and say it's like 10%, and then the trade goes nuts. That can inflate to 20, 30% or more. I get very uncomfortable if something is above 20 or 30%. That's just my risk tolerance. And that's typically where I'm taking profit to get it back below that number. And then the second part of the question, what do you anticipate the percentage of alt trades to Bitcoin? I have no idea. We have to see when we get there. Like right now, just as a general rule of thumb, like I keep smaller alt trades to like 5%.
Oh yeah, that's another thing. Hot. It made a new all-time high USD.
Oh yeah, I'll pull that one up. Are there still spots available for the boot camp? Yeah, I'm gonna send one more email. After I checked this morning, we had 2 or 3 left. So once it's full, we'll just forward that video page to like a waiting list. Um, so yeah, as of like a couple hours ago, I think we had a few spots. Let's see, Jason, do you guys use RSI at all? I don't. I used to. I have in the past used RSI, MACD, stochastics, all of the oscillators, all of the indicators. For me, the 3 most important things are price action, right, volume, and then dynamic price areas. Yeah, let's take a look at hot real quick.
Yeah, I'll use it occasionally, just during periods of extreme price action. Like sometimes I'll look at it, see if there's some divergence, if things are going parabolic.
Yeah. Yeah, so hot is starting to gain some steam. Was there any fundamental news, Rocky or anybody you guys know?
That's a good.
Is this just catching a bid?
That's a good question. I haven't checked in on that project for a while. I've actually been trend riding it since 6 satoshis when it was only trading on.
Yeah, it's a
that
very
exchange?
slow mover. Fat BTC. God. Okay. Binance. We've got Binance that is actually trading some real volume on this. Okay. So Binance, that's it. You guys see any other exchanges you trust? Either way, so Binance is the exchange to
Ether
look at.
Delta, that's the name of that bloody exchange where I got it.
Yeah. Let's go down to the hour. I see you guys buying. This price action is just so tough to look at. What's the supply on this?
It's kind of almost like a Doge type.
130 billion. Yeah. Yeah, it's very strange.
What I like on the BTC chart, it's a low Satoshi coin.
Yeah.
So if it does like a typical, let's say Dogecoin type scenario where it just rips up to 100 Satoshis on the USD chart, that could certainly give a nice little parabolic spike. And even though I could have sold and bought some dips and all that kind of stuff, it's actually been quite fun just trend riding it and watching it do its thing and even seeing it breaking all-time highs at this point, right?
Yeah.
I just really want the price action because it's such a new project and it's still a lower Satoshi coin. I'm almost looking at it like a Doge type scenario. So I just want to see some like extreme parabolic candles ripping through the charts, and then I'll sell. Then I'll sell some. That's kind of like what I'm looking for right now. Until then, it could chop around. It could go sideways. It could have its corrections, dips, whatever. Do backspin spirals. It's all good.
So here's the floor. It's not, it's not far above zero. Yeah, dude, I don't know why. There's just something about these billion plus coin markets that just make the price action very strange for me. So yeah, new all-time high breakout. You could call this I guess you could call that a breakout. It's just it's so strange when you're dealing with fractions of a penny. I hate trading these charts for some reason. That's a bias that I have.
Yeah.
If you guys haven't noticed, it's just, I don't know.
It kind of looks like a lopsided inverse head and shoulders.
If you took a banana and a pear and you smash them together and then you use really weird numbers, that's kind of what this reminds me of.
So I personally think that it could have a good chance of breaking the BTC all-time highs, which would allow it to go on a nice little run over on the USD charts. And I was kind of eyeing, initially I had like 60 satoshis as a target, but I'm I'm just gonna wait and see anywhere from like 70 to 100 satoshis if it can make it that high. If no guarantees. I just want to see the size of the candles, see if they're going parabolic compared to everything else, and I'm just gonna wait. I'm just being patient. But yeah, if it goes nuts and goes on a rip, then I'm up about probably like 5.5x on this.
Nice.
USD wise, I'm up about 5.5x.
Did you buy pre-listing or where did you get in
Yeah,
somewhere down here?
I bought pre-listing. It was on an exchange called Ether Delta. It's the only
Oh,
time I've
okay.
actually bought anything from that place. Was just for
Ether.
this market, and I've just been holding it ever since.
Mm-hmm.
And that was it. And probably should have bought more, but it's been growing nicely, so whatever.
Yeah. Oh yeah, this is much better. What was I looking at? What chart is this? Oh, this is calculated by TradingView.
So it's
Uh,
got more price data, more sideways price data because of the USDT market only recently opened up this year.
yeah, yeah, that makes sense. I'm gonna add this one though, because this is the real. Yeah, thanks for letting me know that. There we
Plus,
go.
so
Okay, that looks a little more clear.
that's certainly having a nice little
Increasing
recovery
volume.
today, huh?
Yeah, nice. Thank you for that. Okay, let's go ahead and knock through some questions. Martin, when you guys post trade updates, could you maybe add the updated percentage of your portfolio on that position like Travis does for stock trade updates? Yeah, so I was thinking about that because so Travis basically has like one kind of strategy where he's doing like value investing, right? So like pretty much all of his plays for the most part are like multi-month holds, right? So it's kind of like one capital bucket, where in crypto I have like 5 capital buckets. So I have to think about the best way to structure that. But that is a good point. We have done updates where we show like the portfolio as a whole of like percentages. So maybe we can keep like a running tab of something like that. Um,
Mine hasn't changed since the last one I posted, except that um, the size of the portfolio probably more than doubled since the last time I posted it because of the crazy runs.
yeah.
So
Yeah, and
that's
that's the thing too. It's a dynamic thing whenever we're like trading in and out, and we have different time. We have like multiple positions in the same market, right? It's like I don't consider myself to have like a significant position in a lot of alts, even though I have a lot of alts in like cold storage, right? So it's kind of a different thing when you have multiple capital buckets. But yeah, we can put some thought into that. Okay, let's see. Derek, how high do you think the entire crypto market can go during the next bull run? I mean, we can talk about pie in the sky predictions and the models behind how to come up with those. Um, I don't really care about those though. Like what I care about is what I can see on the horizon most immediately. And that's where like, opinions and like pie in the sky predictions are one thing. What I put my weight on though is like where I'm willing to put risk capital into, if that makes sense. Like, so I don't know. I mean, I don't know. Rock, do you have any guesses?
I mean, for Bitcoin or the entire crypto market cap, my pie in the sky guess is maybe doing a comparison to something like gold. I think gold's
Yeah.
like a $7 trillion market cap.
Yeah, about 7.5 trillion.
Seven and a half
So
trillion,
that's one model.
and gold is certainly a backbone of the economy. There's obviously a lot of governments and central banks and such that own gold, as well as private investors, and there's utility for it because of spacecraft and wiring and all that kind of stuff. It's good for electricity. So I think there might be some similarities there. So it wouldn't surprise. So I would, to me, I would just kind of, for myself, I think but gold's also a very niche market. Even though it's like such a big part of the economy, it's also extremely niche as far as its utility and people who are interested in investing in it. So crypto, like I think if we start to get anywhere between a $5 to $7 trillion market cap on crypto, in my mind, I think we're coming much closer to a market saturation point than we are now at a total market cap of a quarter trillion. Right now we're at a quarter trillion, and we had dipped. We almost got up to a trillion at the peak of the last parabola. So if Bitcoin does break the all-time highs, if it does, there's never any guarantees, and this is all just a hypothesis, right? If it does break the all-time highs and it does another market cycle, then in my opinion, the next landmark levels to achieve would be the $1 trillion market caps, right? To start seeing certain things, maybe Bitcoin would hit $1 trillion, and so on and so forth, and maybe some of the top cryptos and so on and so forth. So that's kind of where I'm looking at. I'm also being a little bit more conservative if we do have another market cycle, in the sense that if we do have another run on Bitcoin where it goes parabolic after breaking all-time highs in a good bull run, if it goes to ridiculous price levels, it'll be one of those moments where I'll probably cash out about 90% of my portfolio and not look back until it gets really low. I'm almost, in my mind, even though it could turn into like a stock market and just keep going up for the next 100 years, you never know. Something like that could happen if it ever got to that level as far as on an economic scale. But I'm kind of treating the next one in my mind as if it's the last like bubble. It might not be, but in my mind, I'm kind of treating it like, how far is it going to go, right? Some people like $1 million a coin or 10 million or whatever, it's going to take over fiat. And I'm not necessarily that, I'm an optimist, but I'm not that enthusiastic or optimistic about it necessarily.
Well, and it depends on like what mental model you're using to like come up with those numbers, right? Like, like the first one is like the gold example. Like, okay, there's $7 or whatever trillion worth of gold. Bitcoin's a better gold, therefore Bitcoin should be X, right? Example number 2, or mental model number 2, is there are X number of millionaires in the world. If every millionaire owned one Bitcoin, which they can't because there's more millionaires than will ever be Bitcoin, that means Bitcoin should be X. Number 3 is that right now there is so many trillion is the total money supply of Bitcoin, there is so many trillions of dollars of total money supply in the world. Therefore, if Bitcoin is X percent of that, like call it 5% or 10%, Bitcoin becomes a significant percentage of the global money supply. It would mean that Bitcoin should be worth X. Then you got the McAfee prediction, which is it's gonna hit, what was his latest thing? Either a quarter or $500,000, I don't know. And then, so you have people like him that just throw out random prices based on nothing. And then you have, emotional price levels, like even numbers like 20K, 50K, 100K, $1 million, right? There's so many different ways to look at this. But if you guys notice, most people that come up with these predictions or like talk about this stuff, they're not putting their money where their mouth is. Meaning they're like, maybe they have like, in our world, maybe they have like a cold storage mentality, like a hodl mentality, but they're not trading based on those predictions, right? They're not putting their money literally with what they're talking about. So that's why I don't really care about these. I care about what I think I can actively trade or predict in a way in the short to medium term. And then I have my cold storage for all of these scenarios, right? And outside of that, I really don't spend too much time thinking about this stuff.
Yeah, for sure. There's also going to be, starting next week when I do the boot camp, once a week boot camp classes, there'll be a lot more room for Q&A. I know we got a lot more new people coming in and stuff, so I'll be able to tackle a lot of general questions like that as well.
Yeah, and definitely in the Q&A classes for the boot camp, that's going to be really powerful. Hopefully you guys that have joined that are already well into week 1. Those are really good for like learning the basics. But here, let's knock out a few more questions. Let's do kind of a fire round, and then we'll go ahead and wrap it up because I know we're creeping up on 2 hours here. Let's
see. Someone's asking if would do multiple updates a week. I kind of like the current model where if there's something really wild happening, like a major event, that we do these random updates for it. But
Yeah.
the model of like having a longer update once a week, because there's going to be lots of periods of consolidation and stuff. It's not just going to go straight up, and there's going to be like, we don't want to necessarily get too repetitive either, right?
Yeah.
So
Yeah, that's
it's
what happened
about
before.
time
I think the
management.
impromptu when there's a major move is definitely the way to go for now.
Yeah, and thus far I've just been trend riding myself, so
Yeah.
yeah.
Cool. What do you guys think of the probability of an alt bull run if Bitcoin consolidates here? Well, I mean, we've literally taken bets on that, right? So I think the probability is higher for the larger cap coins. Again, I'm not touching 99% of the altcoins that are out there. It's just the high quality projects that we care about.
Yeah, 99% of them already died with Cryptopia.
Yeah. Um, all right, let's see. Find that I hesitate when taking profits on a trade because I don't want to miss out if the price keeps going higher. I think this is because I'm not clear in my mind whether a trade is a swing trade or a trend trade. Even though I have a plan with swing trade targets. Yeah, I mean, it sounds like you just got to clarify what the setup is you're taking at the time that you take it. So like, is it an accumulation play where you have a different set of risk management? If you're predefining profit targets at the time of entry and you're not taking profit when you get there, that's probably a discipline problem. If you're getting into trades and you don't know where your targets are, that's a trade planning problem. So the discipline problem means you're not following a plan. The other one means you don't have a plan. So those are really the two things that could cause that. And either one is pretty simple to fix. It's either take profit where you say you're going to take profit, or define it and define what the trade is, and either hold and say, I don't care if this thing reverses on me. It's all about like what would leave you with no regrets no matter what the outcome is, right?
Yeah, like even on a lower accumulation play that might take a while for it to get cooking on a new market, I still generally create profit targets where I'd like to sell or where I think the market could go, and then obviously, like with a bounce play, you got to be a lot faster with profit targets because your profit target might not necessarily be a new high. It might just be like a 50% retracement bounce or something like that. So you would drop your fib retracement levels to look at something like that. Or if you're doing a breakout play, you'd use a fib extension and you'd define your profit targets based on extending out into new uncharted territory. And if it's not uncharted and you have some prior price discovery, then you can find some horizontal levels. But so that's kind of like, that should be a part of everyone's routine. One should never just necessarily just buy something without at least having some idea as to where you'd like to sell. Think of yourself like a merchant, right? You're selling I don't know, you're selling vegetables in a market or something, and you manage to buy some really cheap vegetables somewhere, and now you want to go make a profit and sell them for more. You have to kind of know what your markup price is, but at least in your head at the point of buying it. Or if you're like, let's say you're haggling in some market and you're trying to buy some jewelry or some whatever it is, that inventory that you're trying to buy, in your mind you need to kind of have a price point as to where you think you could sell that inventory, what the market would take in future market demand, before you could even set what price you think is reasonable. So just as an example, with the Leo token that we're talking about, to me, it's like, I actually don't even have any interest in buying that token, and I don't really have an interest at this current price point of taking a gamble or a coin toss as to seeing if whether or not Bitfinex will survive or not, because that's what I think. If they survive, then they'll be able to buy back the token with their profit, and the token will keep going up and profit. And if they get hammered hard and they don't survive, then the token could go to zero. However, what I defined for myself is, I said, if it dropped drastically below the dollar ICO price, at that point, I might actually be interested, because now now it's like, do you want an opportunity? You can take that same coin toss bet, but now you have an opportunity to buy in 50% cheaper than the IEO participants. suddenly now the risk to reward and the odds, like the odds might still be 50-50, but the risk to reward and how much I can make off of it suddenly doubled on the reward side, right? So that's kind of like, and obviously I'd have to position size and define, okay, well, if it did go to zero, how much am I literally willing to lose and throw away and go to zero? So that would be like how I would define a risk to reward on a play like that. That was more of a, early stage play versus a breakout. But each type of setup has their own very specific way of doing risk to reward and measuring risk to reward.
Yep. Okay, so why aren't altcoins like Neo, NAS, XEM moving as much as the rest of the market? Well, we're not really in an all tides rising market environment. Rocky and I have been warning about this for like over a year, that the next bull market, we don't expect everything to pop. And that's why we're being much, much more selective this go around, where like the bull market of 17, it was like we were taking every breakout trade we could. But I think a lot of the, we'll call them round two altcoins, like 17 was really like round two for altcoins. Yeah. A lot of those are going to fall out of favor. A lot of those are going to fail. That's why we're not just randomly doing the shotgun approach. So, I think just kind of as a general rule of thumb, something that could be helpful is like, don't just try to catch a falling knife with some of these coins that are just like fading into oblivion just because the prices are cheap. It's kind of like the same thing as what we'd call a value trap in the stock market, right? Where like you have a stock that's down big time and you go, oh man, that thing's trading at a really nice valuation, but is it a trap? Is it just like, is it ever going to come back, or is it out of favor? Right. So that's why we're just looking at the ones that we think have the best odds of survival.
Yeah, there was certainly a mixed performance on this recent bull run, depending on coins. Not every coin performed as well. Sometimes that could actually be a lagging indicator. Like if it did turn into an all tides rising, then sometimes one can catch coins that haven't moved up as much, or similar to like the Ethereum breakout play, kind of followed or mirrored the Bitcoin breakout play. But I also definitely agree with Chris that I think higher quality projects that bring a little bit something more to the table will likely outperform projects that are just a copy and paste of some other project with some glossy, glittery marketing and whatever, right? And so like, to me, Neo, it had its run, and it's probably gonna, it'll probably, if it survives, it'll probably have another little bull run or whatever. But I personally don't feel like it brings a lot to the table. It's following the similar BitShares model of the 21 or the 20 plus delegates and delegate proof of stake, all that kind of stuff. And there's a whole slew of those coins right now that are all just kind of copy and paste of each other, such as EOS, Tron, Neo. They're all just kind of following that model, and to me that's a much more centralized blockchain model on a fundamental note. But also I don't want to bet heavier on projects that aren't necessarily cutting forward on innovation. Like that's why I went a lot heavier on Tezos, because I was like, here's something that's never been done before. I want to bet some money on that. It looks like they got a lot of funding, and it looks like it's moving forward. And so it gained like 450 or 500% from the lows. Whereas something that's like more of a copy and paste coin so far, something like Neo's only gained 150%, and so on and so forth. So there might just not be as much demand necessarily, or I think of survivability and big prices, huge prices, big winners tend to come with like trendsetters. Like Ethereum melted faces off because it blazed a trail. It was a trendsetter. And then you had a lot of clones that came after that, right? And So that's kind of what I'm looking for personally.
And
So
that's why we don't just look at charts, right? Like it's a combination of really the four pillars of analysis that we go into a lot of detail about in the boot camp, which is technical analysis, fundamental analysis, market sentiment, and self-analysis, right? Really, you need all four of those things in line to have a good trade. And yeah, like we said, like this time around, like we're being way more picky with the quality and just the innovation of the projects, because a lot of these are just going to fade into oblivion.
it's a lot
So
less to manage too.
yeah,
When you're in
yeah,
like a
exactly.
billion different shitty projects, just because they'll pop off due to correlation, like yeah, you can catch a lot more crazy spikes on less liquid stuff, but there's like a higher probability of failures on those. Projects dying, developers quitting, whatever, just
And
stuff
if they're lower
happening.
liquidity, you can't trade big size on them.
Yeah.
And we certainly don't want to encourage like any kind of like pump and dump behavior, right? I know there's a lot of really shady like crypto groups out there that will like coordinate and do like these illegal like pump and dump schemes. We don't do that. And that's another reason why we stay away from a lot of like the lower liquidity stuff is we don't want to influence markets, right? Like we don't want to like get in and even like for our own positions, we just don't want to get stuck in trades because we're not day trading this stuff and then selling against your orders. What we're doing is we're buying and trading good quality or what we think are good quality projects, and we're holding for periods of time, right? Like we're real traders. We're not these idiots out there doing pump and dump schemes. So that's another thing. So, hey, with that said, let's go ahead and wrap it up. We're coming up on 2 hours. If you guys have any other questions, feel free to hit us up in Discord. Otherwise, we'll see you guys that are getting on board with the boot camp. We'll see you guys next week. Yeah, Rock, any final thoughts or anything you want to cover before we wrap up?
No, that sounds great. Going on 2 hours. So thanks, folks. Enjoy your weekend that's coming up, and I'll see everyone next week. Take care, folks. Cheers.
Take care, guys. See ya.